morning. Yeah, my name is Rosemary. Sorry, I forgot the pointer. Yeah, it's a good thing to be here this morning to have this discussion that we've had with most of you in various forums like this one. Yes, I'm going to start by giving us a brief overview of who Netcompany-Intrasoft is. Somebody here, earlier presenters said change is constant. I'm sure most of you are wondering why Netcompany-Intrasoft. Just a brief background. We were previously Intrasoft International. And come last year, we joined hands with Netcompany, a big ICT firm in Europe, and we became Netcompany-Intrasoft. So that's the name now. It's not working. Okay. Yeah, so who we are. We are an ICT solutions and services company. We were established in 1996 in Luxembourg, and we have operations in 13 countries now. We have a subsidiary right in Kenya where we sit, so East Africa subsidiary. And key to mention is that we are a key player in the EU. Over the last 25 years, we've been serving the EU institutions in Europe with various products and services. And we proud ourselves of having a track record of implementations of over 500 sites in different countries, over 70 countries now. We are looking at Africa. In Africa, we are in Kenya, we are in Uganda, we are in Tanzania, we are in Rwanda, we are in Zambia, we are in Ethiopia, and so on. And we continue to focus. So that's our global presence. As I mentioned, we were established in Luxembourg. That's where our head office is. We do have several development centers. Our development center, basically for banking and enterprise solutions, I'll mention that quite later, is in Athens. We also have others to do with public sector solutions that we provide, or the EU solutions that we provide in other countries. We do have offices also in South Africa, and key to mention is that the subsidiary in Kenya has a branch in Zambia. Back in 2019, we opened a subsidiary in Zambia, basically to serve that region. So what's our focus? We have a key focus in the banking and SACCO sector. We have partnered with several SACCOs and banks in the region. And as a subsidiary for East Africa, we also do business development, which is the role I take. We do implementations, support locally, as well as customer relationships and account management. Just to give a brief highlight of who our customers are in the region, we have partnered with, or rather we work with Kenya Police SACCO. We work with Mwalimu National SACCO. We're working with Stima SACCO. We do have banks as well. Housing Finance is our customer in Kenya. We also serve Centenary Bank in Uganda, our key customer. Centenary Bank basically is like the Equity Bank of Uganda, having grown from a microfinance, a big microfinance institution, Catholic-based. Now it's one of the biggest banks in Uganda. We also serve Zambia National Building Society, Mwalimu Bank in Tanzania. And on the public sector side, we are quite strong in terms of social security and customs and compliance. And therefore, we are working with NSSF Kenya. That backend that serves you in NSSF Kenya is a solution by us. We also work with KRA in Kenya in terms of compliance solutions. We work with NSSF Uganda as well. We work with RSSB Rwanda and ZRA in Zambia and so on. Just to go back again to just sort of define or just explain what our key markets are. As I mentioned, we do serve the EU, and basically we don't have that here in Africa. We also serve the public sector, which is most of those customers that I've mentioned, and we do serve the enterprise. And enterprise is where banking falls under. So in enterprise, we're looking at serving the banks, anything financial services, the telecoms. We are quite big in Europe in terms of providing telecom solutions. We work closely with SAP to provide solutions in Europe as well. So all those under enterprise. Yeah. So focusing on enterprise solutions and banking in specific, we do provide core banking systems, omni-channels, BI solutions, and anything banking, whether through us, our own IP, or through various partnerships that we do have. And I would give an example of a solution that we provided in Zambia. In Zambia, the national payment switch, equivalent to our PesaLink, is provided by us. We partnered with FIS Global for our financial switch. And we've seen that country on board 19 banks on that switch. It's actually quite upscaled in comparing with PesaLink of Kenya, where they do everything on the financial switch. As I mentioned, we do telecoms in Europe. We have analytics, we have IT security, and key to mention is that we have a department for IT security, specific department that also serves the NATO, the EU, and so on. So that's a brief on who we are. Yeah, I'll give a brief highlight on our core banking system as I go to the topic of today. Our core banking system is called Profits Core Banking System. It basically serves the banks, it serves the SACCOs, the microfinance, and it also serves the credit servicing institutions. It's quite, for instance, in Europe, it's quite different that there are credit service institutions that are basically regulated by the regulators just to manage, post-loan management. So what banks do, especially in Greece, once the banks disburse the loans, they just sort of hand over that process to these institutions. They run with it from recovery and so on. So Profits has a version that serves this kind of market. It's not in this country yet, but through the way technology is going, you never know. It may come to a time where maybe banks will outsource this kind of services to providers. And now to the topic of the day. Okay, yeah, we're going to look at the current landscape. What is the current landscape on SACCOs? What is the recovery? I mean, how do we recover from low business performance as SACCOs? And of course, in our mind, we are saying leveraging digital transformation. How do we recover from stiff competition? And the journey. As Tony mentioned, this is basically a journey. Recovery is a journey. It's a journey through digital transformation. And what is the future of banking technology? Let's proceed. Okay, so we are saying the current landscape in the SACCO is disruption has happened. Most of us in this room have adopted technology. You have a core banking system, or we have a system that is basically serving you like a core banking system. And we have moved. We have digitized, we have adopted digital transformation. Most of us have the core banking systems. And we're looking at, we have seen increased efficiency and turnaround time in terms of service delivery to our members as a result of this. We have also seen API architecture adoption. We are seeing, the member is asking to be connected to the whole world. And by the end of the day, to have this delivered to the customer, to have this improved customer experience, we need a strong backbone. And this strong backbone today, we are saying it's a core banking system. The core banking system is a center that will be able to help SACCOs continue with this journey, continue with this transformation journey, you will not be able to open your APIs to the world for your members to experience that super customer experience, or even to have value for the digital solutions that you are going to implement without that strong backbone behind it. We're also looking at the core banking system, assisting SACCOs in terms of falling back to their business continuity plans in case of, let's say, disruptions. And this happened quite well during the pandemic. We realized that most of the SACCOs that had strong and robust core banking systems were able to quickly, put things in place and serve their members remotely without having them to visit their branches. This, we are saying, it cannot be. It cannot happen without that strong backbone of a core banking system. Can we go back? And what we are saying is, we have seen, yes, there is transformation. There is improvement from where we are coming from. But one thing we have realized in the sector is some of these deployments have wrong architecture. You may be having a core banking system, but the architecture, the way you have laid it down in terms of serving your members and getting the value that the core banking system brings is not in the right place. This is a discussion and a conversation that we've had with most of the players in the market. And what we are saying is that the best architecture is basically to have this the core banking system at the center of everything, then integrated to all other things that you want to do. We've seen where SACCOs are coming from. Everything was in one place. The architecture was, this is the core, this is the mobile banking, this is agency banking, and therefore when any of these solutions go down, so there is basically no service for the members. And we're saying position or place the core banking system with the right architecture, integrate it to your omni-channels, integrate it to your BIs, integrate it to your CRM, integrate it to whatever that you want to provide to your members. But without that right architecture, then you'll not be able to draw value. And people have talked, the previous speakers have talked about value. It's about value. And therefore, we'll have a situation where if we don't get this value, people will start talking about costs, Core banking systems are expensive, but the deployment, the architecture, the way you position it, it needs to show or to bring out that value to all stakeholders, whether to the board members, to the stakeholders in terms of members, and so on. So that is what we are advocating for, because we have seen there is a gap. So again, we are saying the journey to recovery from low business performance is going to be supported by a robust core banking system. It's tough, it's upwards, but then without a strong core banking system, it's going to be a challenge. And we're looking at the value that comes from a core banking systems, for instance, from a NPL management point of view. Post-COVID, majority of the SACCOs have gone through this dip of having a very bad loan book. How do we then recover or correct this book without a strong core banking system that is able to sort of give you functionalities that will enable you to overcome the manual processes of chasing your members and chasing defaulters to be able to recover this kind of loans? So most core banking systems are actually coming with what you call a sniffing functionality. And this functionality we've seen with the partners that we have right now, it's really adding value from a point of view that when a member has defaulted and they have their current account active, anytime there is any inflow in that account, the core banking system will automatically fetch it and repay the loan. This is something that was such a big challenge with the previous deployments that SACCOs are coming from. The staff had to follow this member manually and sort of to block that amount in the account and so on. But this is now a headache that has been moved away from the credit department. And the system, the core banking system, is able to just assist in terms of recovering all these loans. In terms of loan interest management, we've also seen that there has been previous revenue loopholes where the systems were not able to calculate interests on different dates. If I lend you money on the 12th, for instance, I'm only able to calculate the interest at the end of the month. So that interest for all those days within that month up to the end of the month, or SACCOs were not able to recover or to sort of manage it. We've seen this value coming strongly with strong and robust core banking systems, and also in terms of the current demands, where SACCO members are demanding for instant loans. Loan chap. They want a loan anytime they're buying goods and they run out of cash. They want to instantly get a loan from their SACCOs. Without a strong back end, you'll not be able to go through this kind of, be able to offer this kind of a product to your members, because the core banking system is sort of smart enough to just work out that eligibility, credit scoring in seconds, and be able to disburse that loan to the member. So what you're saying is that somebody said, basically without digital transformation, without adopting the right core banking systems, a robust core banking system, then it's going to be a very slow move for SACCOs to recover from low businesses. We've seen also during the pandemic and even after the pandemic, majority of members either lost their businesses and lost their jobs and so on, and therefore they came to a time when they were mass withdrawing. They came to the SACCOs, they withdrew everything they had, whether they had term deposits and everything. And SACCOs are at a point where they need to sort of recover. That's why we are calling it lost deposits. SACCOs are at a point where they need to develop CASA, grow CASA, open current accounts, savings accounts, return that lost deposits. Without a robust core banking system, again, we are saying this is going to be a very, very slow process. Having engaged with the sector for some time in my banking life, I realized that majority of the SACCO members are actually multi-banked. They are multi-banked, and the reason they're multi-banked is because the SACCOs they bank with basically do not give everything that they're able to get from the banks. On their banking side, they're able to get term deposits, they're able to get trade finance services, they're able to get treasury services, and so on. And what we are saying, for us to be able to push, to call back this kind of deposits, we need to have a strong, robust core banking system that will basically enable us or put us in a position where we can compete with these banks. If the banks have connected their customers to, say, KRA, they are collecting revenue for KRA. They are collecting revenue for county governments. They are collecting for utility companies. These are deposits, and there is no reason why SACCOs should not attract this kind of deposits if they have a strong core banking system that will then enable them to give these kind of services to their members. You too can be able to get your members, get everything from one-stop shop. They can come in, have current accounts, savings accounts, pay their utilities, pay their KRAs, and basically also get the kind of attractive term deposits that they can get from the banks, and also do trade finance. I've seen that, yes, in the regulation, probably you're not supposed to do this, but you can be sponsored. I worked in a financial institution where we were sponsoring SACCOs for their SACCO members, basically to purchase things like LC. Because the moment your member leaves your door to go to, say, a commercial bank to get an LC, that commercial bank will ensure they also attract that member to open an account. And we are basically saying, bring in CASA, let there be a retention for your members. Avoid this sort of idea of having your members being multi-banked, or even moving away from you and moving to the commercial banks, because of solutions that you can basically offer through implementing a robust core banking system that the banks out there have. We're also seeing a lot of treasury services that the banks are offering. And the SACCOs can actually do the same. You can offer the same basically to have your members, but then this needs to be, they cannot be supported from a manual processes point of view or from a rigid system that will sort of make you be semi-manual and, it will not be efficient, and then the turnaround time, the customer experience will be different, and then the member will just realize, comparing you and the banks, they're better off with the banks. Let's move. As the pictures there shows, we're saying this is a very competitive environment. We are competing with fintechs, especially in the payment space. We are competing with the MNOs, the mobile network operators. We are competing with banks, and everybody here is running for the same cake. And what we're saying, for the SACCOs to recover from this kind of stiff competition, or rather to stand firm, we need to sort of, innovate unique products for your members. Innovate unique products for your members. And this will be powered, again, through a very strong, robust core banking system. We are saying product diversification. If you see your members are being moved because you cannot diversify from the traditional products that you have, diversify, basically, to be able to overcome this kind of competition. Expand the target market. Traditionally, the SACCOs have shied away from banking the millennials. They have shied away from banking the Generation Z. And the banks now, currently, are just going for this customer. It's time that SACCOs also thought of expanding their market. They're expanding their target. These young people, the millennials, are getting very attractive jobs, very good jobs. They are rich, but they need to also be brought into the payment financial system, be taught how to save and how to benefit, basically, from the value that the SACCOs give. We're seeing that, I'll give an example. For instance, in South Africa, there's a bank, I think, called Discovery Bank that basically launched virtual banking. And this bank is targeting the millennials. And there has been sort of a mass migration by the millennials in South Africa from these traditional banks to this bank. And why is this bank doing this? Because they have seen there's a lot of potential in this, in this kind of market. Somebody talked about compliance. It will be a challenge to, again, stay compliant with your regulator, with GDPR, and with the government, and so on, without a robust core banking system. Let's move. Finishing. We said it's a journey. Recovery is a journey. And we're saying one key thing that we need to do is to adopt a robust core banking system. This will give you, the benefits will be a turnaround time in terms of your service delivery. You'll bring value to your members. You'll increase your efficiency. You'll open your banking to the world, the API, so the members will get more products and so on. We're also saying, as part of a key to also think about is your growth strategy. We need to have transformation, digital transformation as part of your growth strategy, products and services innovation, good policies that will, again, best practices coming from the cultural practices that most of the SACCOs have had. This is now behind us. We also need to look at what are the emerging markets. The SACCOs cannot be left behind. And we're saying this is how the future looks like. We are coming to a point where we are going to have mobile and virtual banking. As I mentioned of that bank in South Africa and many others, we are coming to a point where the brick and mortar banking is not going to be relevant. Members are not going to be walking to your branches. They will be served at the comfort of their homes. Everything is going to go digital. Millennials are going to increasingly ask for demand for very specific products. We are looking at emerging technologies like BI, AI, IoT, and blockchain, basically affecting your environment. And you cannot be left behind. You need to change with times. As somebody said, we cannot be left behind. If being left behind means dying, we need to ensure the SACCOs are not left behind. They adopt technology, and they move on with it. I think that's it from my side. Thank you so much for your time.